Welcome to The Explainer. Today we are diving deep into a fascinating analysis of XRP's current market position. We're going to try and cut through all the chatter and look at the core arguments for its future, especially with all the uncertainty swirling around right now.
You know, if you've spent any time on social media recently, this probably sounds really familiar. There's this feeling of fear, almost panic, every time XRP's price dips, and boy, does the commentary get loud.
And that feeling, that constant, emotional, reactive chatter, well, the analysis we're digging into today has a name for it: the noise. It's described as this huge distraction, something that's really designed to pull your attention away from the much, much bigger picture. Okay, so if all that daily panic is just noise, then what's the signal? What's the real story here? That's what this is all about, separating that short-term static from what the source claims are these powerful underlying signals that are telling a completely different story.
So this first signal, it's all about changing your perspective. It's about ignoring that minute-by-minute microscopic view of the price chart and actually zooming out to see the real structure that's been building.
And wow, look at this. This is such a perfect example. You look at the 1-hour chart on the left, you see a tiny drop, and everyone screams, "It's over! The party's over!" But then you just zoom out to the 1-week chart on the right, and suddenly there's clarity. The price is actually up almost 19%, and it's forming a classic bull flag, a pattern that traders get really excited about for a big upward move. But look, the signals we're talking about aren't just showing up on the charts. According to this analysis, maybe the most powerful structure isn't on a chart at all. It's being built right now in the halls of Washington, D.C. So what we're seeing is a really clear legislative roadmap taking shape. It's not just talk. It's a series of concrete steps. It builds on last year's Stablecoin Act, and just yesterday, Senator Tim Scott set the date for the final committee vote on this huge piece of legislation, the Clarity Act. And that vote, it's happening next week. And right at the heart of this new act is something called the maturity test. Now, this is a huge deal. This test would finally create a clear, legal way to figure out if a crypto network is decentralized enough to be treated like a commodity, think gold or oil, instead of a security. This is exactly the kind of legal clarity that big institutions have been waiting for before they can jump into the market in a big way.
So even as Washington is laying this groundwork for clarity, there's another kind of battle going on. And this one is psychological. It's aimed right at you, the individual investor.
I'm sure you've seen this number floating around, right? 330,000. It's the supposed number of accounts that hold a big chunk of XRP. And the story it tells is that you're late, that only a small, rich club got in early.
But is that the real story? The source we're looking at argues, nope, not even close. In fact, they call this rich list one of the most effective psychological tricks in the game. Its job isn't to inform you, it's to make you feel like you've already missed out.
So let's break down why this list is so misleading. First off, one person can have tons of different wallets, right? And even more important, one of those rich addresses could just be the cold storage wallet for a huge exchange, holding the funds for literally millions of individual users. The whole point, the source claims, is to make you feel small, to make you feel like you missed your chance, and ultimately, to shake you out of your position.
Okay, this next part is where we get to the absolute core of the argument. This is where, according to the source, opinion ends and the cold, hard math begins. First up, let's talk about demand. Not just any demand, but the projected institutional demand that's expected to hit from big financial players and those new XRP ETFs. Now, based on an analysis by Chad Steinerbraber, and this is considered a conservative estimate, we're looking at just 12 to 15 medium-sized funds. And that's it, taking a whopping 4.8 billion XRP off the market this year alone. Okay, hold that number, 4.8 billion in your head. Now let's look at the other side of the equation. What's the total amount of XRP actually available for sale on exchanges right now? Well, as of this morning, the total liquid supply, the amount you or I or anyone could actually go buy on an exchange, is just 1.5 billion. And There it is. That's the problem, isn't it? You've got 4.8 billion in projected demand chasing just 1.5 billion in available supply. How does that work? The math just doesn't add up.
And according to this analysis, this isn't a scenario where the price just kind of gently climbs. No. When you have inflexible, must-buy institutional demand slamming into a fixed, inflexible supply, the price doesn't just rise, it gaps. It has to jump instantly to a much higher level to find a new balance.
And that brings us to the final signal. This one comes from one of the most respected traders on the planet, and it's a message that was delivered without saying a single word.
We're talking about the legendary Peter Brandt, a true icon in the world of commodities trading. And he recently shared a single chart of XRP with all of his followers.
But here's the kicker. He didn't use any words. There was no analysis, no price targets, nothing. He just posted the chart. The analysis argues that the silence itself was the real message.
Why? Because the pattern on the chart is supposedly so incredibly clear that it doesn't need any explanation. We're talking about a massive, multi-year bull flag pattern that's been in the making since 2018. For a trader like Brandt, the signal is that the pattern is so obvious, it simply speaks for itself.
So that leaves us with this final thought, right? In a market that's just full of noise, where everyone is screaming, could it be that simple math is the only signal that really matters? As these huge institutions get ready to enter, and with a shrinking supply, maybe the change we're talking about isn't about hope or speculation. Maybe it's just a matter of mathematics.